Have you ever scrolled through social media and seen a picture of someone standing next to a flashy new Lamborghini or on the deck of a massive yacht? It's easy to think that's what being rich looks like. But what if I told you that the real wealth, the kind that lasts for generations, is almost completely invisible to the public eye? The truly wealthy aren't just buying expensive toys, they are quietly acquiring things most people have never heard of. They operate in a world that doesn't show up on Instagram feeds or in celebrity news. This hidden world is where fortunes are not just maintained, but multiplied again and again, far from prying eyes and market noise. While everyone else chases the latest hot stock or cryptocurrency trend, the super rich are playing a completely different game with different rules. Their strategy isn't getting rich quick, it's about staying rich forever. They know the loudest person in the room is often the poorest. And true financial power comes from assets that don't scream for attention. In this essay, we're going to pull back the curtain. We're going to explore the hidden assets the rich use to protect and grow fortunes. Before we get into the juicy secrets, we need to get on the same page about one simple word: asset. Now, when most people hear this word, they might think of their house or their car. But the rich have a much stricter definition, and it's a critical one. To them, a true asset is something that puts money into your pocket, not something that takes money out of it. It's a simple but profound distinction. An asset is something you own that generates income for you. You could buy a rental property or own a stock that pays dividends. The key is that it generates a positive cash flow or grows in worth without trading your time for it. Your primary residence, while valuable, costs you money every month. Taxes, insurance, maintenance. Your fancy car loses value the second you drive it off the lot. Those are liabilities. The rich focus relentlessly on acquiring assets. They use income to buy assets first, then use the income generated to pay for their lifestyle. Understanding this is the first step to thinking like them. So if these assets are so amazing, why are they kept so secret? Why don't the wealthy shout from the rooftops about their incredible investments? The answer comes down to a few key reasons, and the most important one is privacy. High-profile wealth attracts unwanted attention. It can make you a target for lawsuits. It can make you a target for theft. It can make you a target for people constantly asking you for money. By keeping their most valuable assets off the books in a public sense, the rich create a layer of protection around their fortune. Another major reason for secrecy is to gain a competitive advantage. Imagine you discovered a new type of investment yielding incredible returns. If you told everyone, a flood of buyers would drive up prices and reduce future profits. Many hidden assets are illiquid and private. They can't be bought or sold on a public market. Think owning a percentage of a private company. The value isn't displayed on a ticker every second of the day. This lack of transparency shields these assets from the wild mood swings of public markets. Keeping assets private can also offer significant tax advantages when structured correctly through trusts, LLCs, and legal entities. Secrecy here is about using the law to preserve wealth. When you think of a Picasso painting, you probably think of it as a beautiful piece of art hanging in a museum. But for the super rich, that painting is a powerful financial instrument. Fine art and high-end collectibles, rare coins, vintage cars, fine wine, are some of the oldest secret assets. Their market is exclusive, opaque, and operates through private dealers, auction houses, and trusted experts. These items are a fantastic store of value, finite, scarce, and resistant to inflation. A rare Ferrari or a bottle of 1945 Romani Conti is finite. They aren't making more of them. That scarcity defends value and often increases demand during uncertainty. Because the collectibles market is uncorrelated to stocks, it can stabilize overall portfolio returns. Owning these assets blends passion with profit. Collectors genuinely enjoy them, while value can rise silently. They are private. No one knows you own a vault full of diamonds unless you say so. They pass quietly across generations. That privacy can shield value from public scrutiny and the taxman when structured properly. Fine art and collectibles are among the most private, durable ways the wealthy store capital. They smooth returns and preserve wealth when markets get noisy. While art and collectibles are fascinating, the real engine of wealth for many of the world's richest people is private equity. This means owning a piece or all of a business that isn't listed on a public exchange. Think regional chains, successful local businesses, or startups before they go public. The silent giants of the economy. When you invest early in a private company, you get in on the ground floor. If it scales from a $1 million valuation to $100 million, your stake can multiply many times. Returns like that are rare in public markets. The risk is higher, but the reward can be astronomical. Beyond growth, owning a private business gives you control. You can influence direction and operational decisions. You can steer it toward profitability. You're not just a passive shareholder. Access to deals is the secret sauce. Opportunities flow through networks, VCs, and private equity firms. You can't log into a brokerage and buy these stakes. You need reputation and connections. Once in, investments grow quietly away from public scrutiny. An eventual sale or IPO can create a life-changing liquidity event, turning an illiquid private asset into a huge payout. Now let's talk about an asset that is completely invisible. You can't touch it, see it, or store it in a vault, but it can be more valuable than a skyscraper. Patents, trademarks, copyrights, and trade secrets. Patents grant exclusive rights. Others pay licensing fees, generating long-term cash flow. Copyrights, songs, books, films, get paid each time they are used, streamed, or licensed. Trade secrets like the Coca-Cola formula or proprietary algorithms can last forever if kept confidential. IP creates a toll booth. Every use pays the owner and builds a durable competitive moat. Wealthy investors buy patent portfolios to create steady passive income. This invisible asset silently guards profits year after year. After hearing about all these exclusive secret assets, it's easy to feel like this game isn't for you. But that's the wrong takeaway. You don't need millions to start applying the same principles the rich use. Shift focus from earning and spending to consistently acquiring assets, no matter how small. Adopt the mindset of an owner, not just a consumer. Start with low-cost index funds and ETFs. A tiny slice of hundreds of businesses is ownership. Automatically invest a small amount from every paycheck. Build your version of intellectual property. Skills, content, a brand. Monetize it with a side hustle, consulting, blog, YouTube channel. Embrace quiet consistency. Discipline and long-term perspective are the true secrets. The wealthy build wealth brick by brick over decades. Automate investments and increase your savings rate. Educate yourself continuously. Stop watching and start doing. Apply these lessons and you're not just an observer, you're an active participant in building your own quiet fortune.